And the Federal Reserve on Wednesday cut its key rate by 0.25% as widely expected. However, two policymakers dissented. Governor Stephen Miran voted for a 0.5% cut, while Kansas City Fed President Jeff Schmid preferred no cut to rates after last month's reduction.
The labor market appeared to be gradually cooling, and inflation remains somewhat elevated. In support of our goals and in light of the balance of risks to employment and inflation, today the Federal Open Market Committee decided to lower our policy interest rate by a 0.25 percentage point.
Fed boss Jerome Powell cautioned investors against assuming the U.S. Central Bank would cut rates again in December. Treasuries yields and the dollar jumped while stocks turned negative after Powell's comments. Traders now see about a 60% probability for a 0.25 point cut in December. Prior to the Fed boss's speech, a move in December was almost fully priced in, with a 90% chance of a cut.
We continue to face two-sided risks. In the committee's discussions at this meeting, there were strongly differing views about how to proceed in December. A further reduction in the policy rate at the December meeting is not a foregone conclusion. Far from it. Policy is not on a preset course.
Fed policymakers repeated their assessment that, quote-unquote, job gains have slowed. And the policy statement post the meeting said risks to employment rose in recent months. Now, officials also characterized economic growth as moderate. They also warned that inflation has moved up since earlier this year and remains somewhat elevated. Powell acknowledged the lack of economic data during the ongoing government shutdown would likely cause policymakers to proceed more cautiously. He said, if you're driving in the fog, you slow down.
If you ask me, could it affect the December meeting? I'm not saying it's going to, but yeah, you could imagine that what do you do if you're driving in the fog? You slow down. So that could or could not. I don't know how that's going to play into things. We may get the data may come back, but there's a possibility that it would make sense to be more cautious about moving. I'm not committing to that. I'm just saying it's certainly a possibility that you would say we really can't see, so let's slow down.
The U.S. Central Bank will stop shrinking its Treasury holdings from December 1st. That ends a 3-year effort of quantitative tightening. The Fed's plan to end its balance sheet runoff comes amid rising funding costs that comes after stress signals in money markets have intensified in recent days.